Good morning. It is Monday, December 11th, 2023. It's just after 10 a.m. on the East Coast. This is Rob Sin on Twitter, on X, at CEO Technician, on CEO.ca, at Goldfinger, and here on YouTube at Goldfinger Capital with another weekly video. I'm going to take myself off the webcam. Sorry for that. There's a lot of sun in the room I'm in, and I think it'll just be a distraction to keep the webcam on. So I'm going to turn it off. Hope you don't miss my face. Today we've got a lot to get to, as always, starting with gold and the crazy action of the last week or so, starting with last Sunday night's short squeeze up to 21.52 on the February contract, followed by the reversal lower. And you can see this morning we're all the way back to 2001. So $150 lower than last Sunday night's peak all-time high price. But look back to the left, we're basically back to late November levels, November 26 levels here near 2,000 an ounce. So a lot of different opinions about gold and silver and what happened and what it means for them. And a lot of bearish takes are now starting to emerge. A lot of people doing hindsight analysis saying, I told you, it was going to top. I told you it was going to crash. I told you not to chase the move. Like a lot of all the stuff, all the different shit that people come up with after the fact. It's all emerging. I'm going to try and break it down as clearly and concisely as possible. So first of all, the purpose of the futures market, so the commodity futures market, so wheat, oil, corn, copper, silver, gold. The purpose of these markets at their core is to transfer wealth from the many to the few. The intended purpose is for producers, for commodity producers like farmers and miners and oil producers, to hedge their production, to better manage their finances, to have less volatility in their earnings stream, yada, yada, yada. And all of that is fine and well, and it's very much true. But at the end of the day, there's a lot of speculation that occurs in the futures markets. In fact, it's an entirely speculative market, really. And the purpose of it is to transfer wealth from the many to the few. And we see this over and over again. And last Sunday night and the action since is just another example of this transfer of wealth from the many to the few. I'll just take a stab at what happened there. The gold market was very strong the week before. So that final week of November, gold was very strong. And you can see that Friday, the first day of December, gold started to move up. So it had a very healthy consolidation there for a few days around 2050, 2060. But then it really started to move up there on that Friday afternoon. So clearly it felt like somebody was caught short. Somebody was covering a short. That's what it felt like to me watching the market, having watched it closely for many, many years. And there may have been a big option position, call position at 2100. So there was a lot of sensitivity in the market to the 2100 level that somebody may have sold quite a few calls at that $2,100 strike price. And so when Sunday night trading began and price started to push above that, suddenly there was a panic to cover that exposure. And I think that's the best explanation. That's the simplest one. That's the clearest one. That's the one that makes the most sense to me. There was basically a leveraged short player that was forced to close their position, and they closed it basically at the all-time high. So once that covering was done, once that position was closed, the market was very vulnerable, extremely extended. I mean, if you just look at the move that gold has had, from 1950 to 2150 in less than a month, it's very extended to the upside. It just simply there wasn't enough buyers. There were many more sellers than buyers above 2100, and we reversed quickly back down about $100 an ounce. And since then, I think the trading is just simply explained by this is a market that had a very big move in a very short period of time. And it clearly showed there is plenty of supply at $2,100 an ounce. So it had to correct lower. It needed to come back and find a level where sellers start to dry up and real money buyers start to re-emerge back into the gold market. So we're figuring out where that level is. It might be at 2000, it might be at 1980, we don't know, but we're going to figure it out here probably in the next week. What's the level where the central banks start to come in and accumulate again? So gold is finding its level again, and honestly, $2,000 an ounce is not a bad level when you consider everything else that's going on here. Another factor that helped gold reach that 2152 level is suddenly there was this sharp shift in Fed funds futures, that suddenly it was no longer going to be one more rate hike. It was actually going to be, no, the Fed is on pause and they might cut even sooner than expected. So the rate cut probability of a first cut in March went up to about 65%, right around that 2100 move above 2100. So we basically went to a 2 in 3 chance of the first cut happening in March. Well, now that's dropped back under 50%. This morning it's down to about 40%. And actually, I am actually pretty skeptical that there will be that cut in March. I think the Fed is probably going to err on the side of caution there. And it's more likely to be in May or June, so the middle of next year. And the Fed will still be able to get in 4 rate cuts. Even if they start as late as June, they'll still be able to get in 4 rate cuts in 2024. The people that were saying 6 cuts in 2024, I think that was way too optimistic. I don't think the Fed is ready to do that much unless there were to be serious signs of weakness in the labor market and inflation really overshooting to the downside. We have a Fed announcement this Wednesday. So we have CPI tomorrow morning, PPI Wednesday morning, and then a Fed announcement Wednesday afternoon. So definitely action-packed data on Tuesday and Wednesday of this week. And all of that should really help to have the gold market find its real level here. And I would not be surprised if it finds support right here at 2000 and starts to gradually move back up again. I did not like that move from 2050 to 2150 in basically 24 hours there early in the month. I don't think that was healthy at all. I think it's much better. I much prefer to see gold going up $10 a day gradually rather than $100 a day and making a blow off top, right? We're starting to see easing beginning globally, starting with the emerging market central banks. And you can see that illustrated here, the number of central bank rate cuts globally. You can see it's really starting to pick up here in 2023. And you can see that the emerging markets are now into monetary easing on net, while the EU, the UK, for example, the Bank of Japan, and the Fed are still erring on the side of tightening, but definitely on their way towards easing. And when we update this chart a month from now, I expect that most likely we will see all global central banks are starting to enter an easing cycle. So that is also very supportive. That's a tailwind for the precious metals market. The fact that we've been through all of this tightening in the last 2.5 years, and now we're just at the cusp of an easing cycle, and it could be a very significant easing cycle. And then, of course, we have the central bank buying of gold, and everybody knows about this by now, but it's still quite substantial. 2 consecutive years of more than 1,000 tons of gold purchases on net, and no signs that that's stopping. China has continued to be a voracious buyer of gold. And that and Chinese buying may have helped to actually contribute to that push above 2,100 nearly 2 weeks ago. And also, you have to ask yourself, a lot of people ask me, do you think that's it? Do you think 2,152 is the high, that gold is done now? And I just asked them a number of questions of like what has really changed? And does this sort of outflows from gold ETFs, is this characteristic of an all-time high? Is this characteristic of a major market peak? And I think you just have to answer that no. It's simply no. This is not characteristic of a major market top. If anything, it's characteristic of the opposite. Okay, it's characteristic of the opposite. And then I go back to this post that I wrote on November 23rd, and I look through everything I said that day. And by the way, gold was 1990 at that point in time, right? So it went from 1990 to 2152, and then we're almost back to where it was at the time that I wrote that piece. And I looked through everything here, and I don't think any of this has changed, quite frankly. Okay, I really don't think any of this has changed. And even we still have favorable seasonality here this month. Okay, that hasn't changed. Okay, we just had a crazy $100+ an ounce move in the futures market, and came right back down to a big level of support. And certainly the budget deficits, the situation facing the U.S. Treasury has not changed either. Okay, and also the de-dollarization away from the U.S. dollar by the BRICS nations, that hasn't changed. So just reading over all of this again, nothing has changed. The only thing that happened is we had a crazy price spike and reversal back lower, and the market just simply needs to reset. And the VIX, the so-called fear index, basically a measure of implied volatility in the S&P 500 options market, we're at a more than 3-year low. Okay, so we're at 12.35 as of Friday's close on the VIX. That's pretty much about as low as it ever gets. I mean, it has been lower at some rare periods, in the past, but it's very rare that the VIX gets lower than 12. In fact, it's rare, just look at the chart, that the VIX even gets down to 12. And frankly, a low VIX is not a favorable market environment for precious metals. A low VIX is indicative of a strong stock market, relative complacency among investors, low volatility market environment, and just a relative calm, right? And then, you think, okay, we have a VIX at 12.35. What's happening in Ukraine? What's happening in Russia? What's happening in Gaza, in Israel? What's happening in Iraq? You have to ask yourself, and what's happening in the political sphere of the West, of major European countries like France, like Netherlands, like the UK, and then, of course, the US and Canada. What's going on? Just ask yourself these questions. Is it all characteristic of a 12 VIX? And I think the answer I get is no. And so I say, okay, is this a reason to be a seller of gold? Is this a reason to sell all my gold and all my silver and pile into Microsoft, Apple, and Nvidia? And the answer I get anytime I think about this sort of logic is no, absolutely not. In fact, if anything, it's telling me to buy more precious metals. So anyway, call me a gold bug or whatever you want to call me. I'm just literally calling it like I see it. And I have no interest in being a bug. If anything, I just have an interest in making money and doing the best that I possibly can in the market, and giving you the best market, insights and analysis that I can possibly give you. Um, I I don't want to be right. I just want to make money. Okay, I think that's the best way to say it. So gold miners, we're seeing a lot of charts, a lot of stocks coming into key support levels. Okay, so if I go through um, the different charts. Oh, by the way, so prior to getting into the gold miners, let's just look through the macro market structure here, so you can see why the VIX is at 12, the S&P is cruising to new 2023 highs. The volatility has dropped off substantially in the last couple of weeks. Every dip is being bought. The market really cannot string together 2 down days in a row. Yeah, so the bulls are in control, and frankly, there's no reason to overthink this. And I wouldn't be surprised if we go even higher into year end. Seasonality is very favorable. Blah 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 blah. Just don't fight it. Okay, just don't fight it. The Fed is about to wave the white flag and start cutting. That could drive stocks even higher. And even if you think valuations are insane and the market is overextended, it can get more insane. Trust me. There's not enough evidence here. I would love to be bearish. I'd love to be putting on short bets. It's just there's not enough evidence for it yet. Okay. This market can absolutely go higher. And I think people trying to short here and fight this are crazy. Okay. And there's plenty of stocks that are working really well. I'll give you two examples: Lululemon and Uber. And I love these two because they're making new 52-week highs. They're breaking out, and they're both great companies. And they're both companies that I use on a regular basis. I use their products. Okay, I'm part of the reason why these companies are having great earnings, and their stock charts are making new breakouts and new 52-week highs. So Lululemon, absolutely, they've cracked the code on clothing and yoga apparel. Their brand is iconic, and they make really high quality stuff that people want to buy. Right? I would go shop at Lululemon. The last $100 in my pocket, and I needed a new shirt or a new pair of shorts, I would spend that at Lululemon. Call it overpriced or whatever you want to call it. It is high quality clothing. Okay, and they've really cracked the code on men's clothing as well, making men look good. People want to look good, people want to feel good, and they're willing to spend extra money to do so. Uber is the app, the platform that the world is beginning to run on. They've absolutely cracked the code. People don't go out to eat, they order Uber Eats on their phone. If you're traveling and you need a ride, you use your Uber app to get somebody to pick you up and take you there. They've absolutely cracked the code. They have built out a indispensable priceless platform, and the stock is being added to the S&P 500. So you don't need to really focus on the broader market and try and guess which way the S&P or the QQQ is going to go. Just focus on being a good stock picker and good companies that have strong charts. And Lululemon and Uber are two of the best examples of that today. Oil services. So this is a trade. I'm not in this yet, but I am stalking this one. I am watching this very closely because This is gotten pretty oversold. It's gotten beaten down pretty badly the last couple of months. $300 a share down from 365 in September. Oil has been beaten down. Natural gas has been beaten down. But I am bullish on this sector, bigger picture. So the right setup, the right buying opportunity could be presenting itself here very soon. Seasonality for oil services starts to turn very favorable in a few days. So basically, like Friday, it starts to turn favorable, and that positive seasonal bias extends into January. So I'd be looking for a potential failed breakdown trade setup here. I don't have enough evidence to pull the trigger yet. I know everybody's like, oh, that's a big head and shoulders. It broke support. It broke down last week. It broke key technical levels, blah, 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 blah. It's below the 200-day moving average. I could hear all the armchair technicians tell me why I'm crazy to be thinking about going long this chart. Let's see what happens. Okay, that's all I'm going to say. Let's see what happens. Let's clean this up a little bit, get rid of some of these charts. And let's talk about gold miners. So GDX, this is now down 6 days in a row, coming right down to test the $29 level, which is a support level, 50-day, the rising 50-day moving average. This is setting up for a buy. In fact, I'm going to go out on a limb here and say this is a buy right here, right now. GDX 2936. I like this. Some people are going to say, no, that gap has to fill. That gap from November has to fill. It's got to go down to 2850. Maybe, but not every gap has to fill. And I like this for a short-term trade. Buy it at 29.36. Look for a buck, a $1 bounce, a buck to the upside. Maybe I put my stop right under that 28.50 gap fill level. But also just longer term, if you're an investor, I think the gold miners could be entering a sweet spot here into 2024. And I'll explain it simply. 3 years of poor performance across the sector. Everybody hates the gold mining sector. Everybody thinks it's a money cauldron, a pit, a fire pit where you throw bags of $100 bills to be incinerated. For 3 years, it has been pretty damn poor and has been that. But now, inflation is stabilizing. The price of crude oil, of diesel, of natural gas, all those big costs for any producing mining company, those have actually trended lower the last few months. Wages are done going up for now. The labor market is rebalancing. I could see a situation where the costs, the gold miners' costs stabilize or even pull back a little bit in 2024. And meanwhile, you have a favorable environment for precious metals to continue rising. So you have the potential that after 3 years of shrinking margins, you could have a year of at least margins stabilizing and potentially even margins expanding for gold producers in 2024. And just from a sentiment standpoint, if you're a long-term investor, contrarian investor, from a sentiment standpoint, gold miners are a place that you've got to be looking here. EQX, I pointed this out on Twitter. This is the same thing as the GDX, down 6 days in a row. It's basically at support. I think support on this chart is 490. It's 493 right now. It got as low as 487 today. Let me go out on a skinny branch, put my foot in my mouth. I like EQX. It's a buy right here. Very similar sentiments towards what I said about GDX. And then, for those of you who are looking for more than just a day trade or a 1 week trade, look at Coeur and IAMGOLD. So both of these are mid-tier gold and silver producers. Look at Coeur. It had a monster rip, almost 60% from mid-November till the end of November. As gold has dropped to $150 an ounce, Coeur has barely budged, basically a 5% pullback, from its high. And Coeur has a very important expansion going on at its largest mining operation, the Rochester mine. This expansion is underway and is expected to increase production for the company in 2024. So this is an important milestone for Coeur to increase production, to stabilize its cost of production, and the stock is just trading well. This has been the most volatile mid-tier gold and silver miner in the world for years, and it's showing some very impressive signs of relative strength. And it looks to me like this November low could be a major bottom in the stock. So Coeur and the expansion at Rochester is a major fundamental driver for the company. IAMGOLD, again, this is a very similar setup to what we looked at with EQX and GDX. Not down 6 days in a row, but down 5 of the last 6. And it's just tanked back to 216 a share. We're back into big support layer for IAG. And IAG has the ramp up of commercial production at Côté Lake coming in Q1 of 2024. So this is another company with a major milestone, the completion of construction at what is going to be their biggest mine, and the ramp up of commercial production at Côté Lake in 2024. So a big fundamental driver here as well for IAMGOLD, IAG. And probably not many people noticed, but IAMGOLD made an acquisition last week. They bought a company called Vanstar, a little junior, for 45 million Canadian dollars. And this acquisition gives Vanstar 100% ownership of the Nelligan project in Chibougamau. So this is a great mining region of Canada. And now IAG is going to be a 100% owner of this multi-million ounce gold deposit. This is an open pitable gold project, great mining jurisdiction, great mining location with key infrastructure nearby. And it's for an open pit multi-million ounce gold deposit. It's relatively high grade. So I like the Nelligan project, and I like that IAMGOLD now has 100% of it. And you have to think that if the Côté Lake ramp up happens on time, on plan, on budget, this company, IAG, now becomes an acquisition target itself from a major producer wanting to bulk up a little bit. Côté Lake is an attractive asset. So is the Nelligan project that they now own 100% of. So Coeur and IAMGOLD, both mid-tier producers to keep a close eye on into year end and into 2024. We have the SILJ rebalancing coming this Friday. This is a tricky one because I don't know exactly which stocks they're going to buy, or at least how much of each stock they're going to buy. But based upon my research and based upon what I've seen previously during these rebalancings, silver juniors like Dolly Varden, DV, like Guanajuato Silver, like Suma Silver, and like Vizsla Silver. So these 4 definitely sort of at the top of my list for this rebalancing this Friday. And just like I said about those other gold and silver miner charts previously, these stocks are also at attractive levels, pulling back, or in the case of Suma, showing relative strength. I mean, look at Suma's performance since mid-November. It looks very much like Coeur's performance since mid-November. And Vizsla, all over the place. Just look at the big range it's been trading in 2023. But this is a very high quality silver junior with a top tier asset at the Panuco project in Mexico. So take a look at those charts for yourself. I wouldn't just buy one of these stocks because of this rebalancing. You only want to buy stocks that you actually have confidence in fundamentally and you like the technical setups. Just don't buy it betting that they're going to be bought up by this, exchange traded fund on Friday. If you buy it for fundamental and technical reasons and it gets a spike due to the rebalancing on Friday, well, that's icing on the cake. CYBN, I've talked about this one the last 2 or 3 weekly videos. So this is just kind of pulled back. It's kind of getting to be boring, but I don't expect this to stay boring for long. We've got more data coming from CYBN before year end. And I really am pounding the table that I believe medical psychedelics will be one of the important sector themes of 2024. This sector is ripe for outperformance in 2024. You can expect more coverage from me on CYBN and the medical psychedelic space over the coming weeks and months, but I just wanted to say I am still very bullish on CYBN, and I don't think this boring price action of the last week is gonna last for very long. And you just have to ask yourself. I mean, it's $168 million market cap today. Is this company that is, by all accounts, going to be launching into a phase 3 trial for its CYB003 candidate in 2024? Is a phase 3 stage company, is $168 million a fair valuation for it when this drug, if and when it gets FDA approval? Obviously, that's a big if. That's a forward-looking, very speculative statement. But this drug could easily have $400-500 million of annual sales if it is approved by the FDA. Obviously, we don't know when or if it will be approved, but you have to do your own calculations there on probabilities, what you think it could be worth, and the timing of those cash flows. But in my estimation, $168 million is a very attractive price tag for the asset portfolio, the pipeline that CYBN has. And then, just like the last few videos, I'm going to end it with big BIG, the big weight. There's not a whole lot to say, quite frankly. There's no new news from the company. There's really nothing new. They did attend a conference last week. Evidently, there was a little bit of core on display that maybe shouldn't have been on display. I don't really know the full story. I'm not going to say any more about that. That's for the company to comment on. But anyway, we got to understand that there's assays pending for 7 more deep holes at Hercules. 7 more deep holes. I don't know what the total number of meters is in those deep holes, but it's definitely over 5,000. So we cannot take, let's say, 3 meters of core and infer anything valuable about the entire 5,000 meters, right? So we definitely have to curb our enthusiasm. Obviously, it's always good. It's always nice to see good looking core, but we don't know what the core grades until we get the assays. And that's just the fact of the matter. And 1 or 2 meters of core doesn't tell you a whole lot about a 1,000 meter hole, right? So you need to see the assays for the entire hole and for the entire 7 holes that are still pending from the deeper drilling. Okay. All I'm going to say is, just like I said in previous videos, the market is going to get, euphoric and enthusiastic from time to time. And from time to time, it also might get very sad and pessimistic. And our job is to just sort of stay calm through it all. And quite frankly, the way big.v shares have been trading the last month or so, just consolidating in this range. This is extremely healthy, constructive, technical price action. Nothing has changed my view here. I am long big today, and I actually really like this setup from the long side. So I am long, and I am optimistic on Hercules Silver, big.v, and I'm not going to make any more guesses as to the timing of news. We'll get it when we get it, and that's all there is to it. So just stay calm and chill. Long big.v. Final comment for this week's video. So I have an email list. I send a morning email out to subscribers on my email list. There's a couple hundred people on this list. It's a special list. I send it to people that I think are real investors in the junior mining sector, that provide value as well for me. They give me feedback on my ideas. So if you think you could be one of those people, send me an email to ceotechnician@gmail.com. Tell me who you are. Tell me why you'd like to be on my morning list. And also, I'm adding roughly a dozen people to my private channel, the Trading Lab channel. So this is a private channel where I give real-time market insights. I give my best ideas there, trade setups, et cetera, et cetera. Again, if you think you would like to learn more about it or be part of the private channel and the email list, shoot me an email, ceotechnician@gmail.com, and tell me who you are and why you should be part of those. Again, thank you for your time, and I hope you have a powerful trading week.